Welcome to the daily insights that matter. This week has been a roller coaster ride with a lot of global banking system collapses. Another one to add to this tally is the crisis of Credit Suisse. With a history of over 167 years, let's dig deep and discuss what happened to this bank. Credit Suisse Group is a global investment bank and financial services firm, founded and based in Switzerland way back in 1856. It is headquartered in Zurich and maintains offices in all major financial centers around the world. So what are the developments with Credit Suisse? On 14th March, Credit Suisse reported that it found material weakness in its 2021 and 2022 financial reporting process. This implies that there was a lack of effective risk assessment and financial irregularities leading to misstatements in its financial reporting. This news led to Credit Suisse's biggest backer, Saudi National Bank, to say it would no longer buy shares in the Swiss bank, which sent the stock dropping 30%. Additionally, Credit Suisse has been involved in multiple scandals that have rattled investors in recent years and led to a big slump in the share price. It started off with Chief Executive Officer Thiam appointing spies to keep a check on heads of management, followed by the collapse of investment funds RK Ghost with losses of almost up to 5.5 billion, and from Greensill that got losses worth 10 billion to its balance sheet. Apart from these, the other scandals included failing to prevent money laundering by a Bulgarian cocaine trafficking gang. After a number of top management changes, Credit Suisse suffered its biggest annual loss of 8 billion in the fiscal year 2022, also led by customer outflows rising to more than 120 billion. With the collapse of SVB and Signature Bank putting a spotlight on Credit Suisse, the shares have further fallen down due to pessimism around banks. Additionally, Credit Suisse has received a lifeline by the Swiss Central Bank to borrow up to 54 billion to shore up liquidity and try to reinstill some confidence in the markets. It has also tried to show confidence by repurchasing around 3.2 billion worth of debt amid the current crisis. Talking about India's position here, Credit Suisse Bank has about 200 billion rupees in assets, which is the 12th most among foreign banks. Although Credit Suisse in India has funded 60% of assets from borrowings, it's a small part of the Indian banking sector with just about 0.1% share of total assets in general. On the other hand, in general, foreign banks have a relatively smaller presence in India with 6% share in total assets, 4% in loans and 5% in deposits. There are more active in the derivative markets, which is forex and interest rate derivatives, where they have 50% share. So what does this news mean for you? The support provided by the Swiss National Bank will give Credit Suisse a little time on its hands while it undertakes a significant restructuring plan when confidence in the financial sector is battered. Credit Suisse now has access to substantial liquidity and it could also handle a month's worth of outflows if things got even worse. Plus, it is not sensitive to interest rates. With India in this picture, it is least affected by this and RBI will keep a close watch on liquidity issues, counterparty exposures and intervene as necessary. That could also lead to some institutional deposits moving towards larger and quality banks. This will have an indirect neutral impact on you. While I say this is me, Rahul Hassan, signing off. Have a great day and stay safe.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.